As we've noted, shares of Nvidia are under pressure after the semiconductor giant failed to live up to investors' hopes with its latest forecast, delivering what is being perceived as an underwhelming forecast for the current quarter, and issuing some issues with respect to its much-awaited Blackwell chips. To talk about it and other topics, we're joined now by Ross Healy, Chairman of Strategic Analysis and Portfolio Manager at MacNicol Associates. Thanks for coming in.
My pleasure, Paul.
You are bearish on the Nvidia story. Why so?
Yes, I am. Several reasons. The first one being is that the stock got at an extreme valuation. And it got to the point where if anything didn't go right, then I think investors were faced with not the downside, huge downside. Mm-hmm. Well, what's happened in the last quarter? The quarterly growth rate annualized looks to be about half of the annual growth rate. Mm-hmm. So there's a very much of a slowing down there. And by the way, the margins were soft as well. But if we look at the users of AI, which is to say Microsoft in particular, and Alphabet, and I could throw in Amazon, what are their stocks doing? Well, they're all heeling over, Paul, mm-hmm. and falling, which tells me that the AI penetration, isn't what people were hoping for.
Part of the reason those stocks are heeling over is that the market is worried that they're spending so much on products from the likes of Nvidia.
Well, that's right. And the question is, you see, if Nvidia is going to have a great next year, who are they going to sell those Blackwell chips to? Because the principal users of those chips, which are those two, have already spent billions and billions and billions. Are they going to throw all those chips out and replace them? I don't think so.
So you would not buy Nvidia at these levels, I assume. What is your view on the mega cap tech sector at large, the other big players?
Well, I rather suspect that if Nvidia gets pulled down and the other AI players get pulled down too, I think the whole sector is going to be on the weak side, and I would be cautious because there's been a lot of general enthusiasm for the whole AI side and all the chip sector. Well, if that starts to heel over and drop, Paul, where do you think anything's going to go?
What's your take on broader markets, particularly here at home? We've seen the S&P TSX Composite do pretty well in the second half of this year so far.
Absolutely, and this is so reminiscent of 2000 when the high techs peaked out and fell. Well, what happened after that? Well, the TSX and the Dow stocks, basically the value stocks, finally had some room to move, mm-hmm. and they did. So they did very nicely. Thank you very much. We're
going to talk about the banks in our next segment, so let's not go there right now. But otherwise, the energy producers are a big weighting, and we've seen them do well as well.
Yes, and I see West Texas Intermediate strong again. I'm bullish on the oil sector, very bullish on the gold sector. It's nice to see. Well, we'll be talking about the banks momentarily, but nice to see the banks coming through. And if we follow through and have lower interest rates, well, then the interest rate sector, that the utilities and so on, they should do well too. So I look at the TSX and say, well, hey, this is, and by the way, it sells at 1.5 times book versus for Standard & Poor's about 4 times book, and
S&P 500.
The S&P 500 for about 4 times book, and for the Nasdaq close to 7. Well, I mean, the value, Paul, the value is here. And furthermore, the groups that ought to do well, including commodities, by the way, should throw that into.
A big theme in the energy sector, and it's nothing new at this point, but it continues, and shareholders have benefited, is the use of free cash flow to buy back shares, raise dividends, or pay special dividends to shareholders of Canadian oil and gas companies. Should we see more of that from other sectors in the stock market?
Broadly speaking, I don't like share buybacks as a general rule. because I think it bespokes a certain lack of imagination on behalf of the executives. If you can't find anything else to do with the money, pay it out as a dividend, for goodness sakes, and share that money. Don't be buying back.
The argument
stock.
was that before doing this, they're running out and drilling too many holes.
Well, there's been an underinvestment in the energy sector that is actually quite profound, and contrary to people's hopes that fossil fuels would disappear. Contrary to the hopes, they have just been increasing, and globally, that's going to be very much the case.